Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets.
Eurodollar. A reactionary bullish engulfing pattern yesterday after the previous session's lower but indecisive spinning top. It does seem that there is some support in the 106.66 to 106.68 zone, which doesn't show up on my daily charts. Anyway, prices rose and breached topside not only the April 2020 low at 107.25, but also the bright red upper time, currently at 107.34 of the late December 2023 to early March 2024 bearish shift pitchfork. However, the market only managed to close over the former, as not far above we have all the moving averages in a tight band between 107.62 and 107.94. Overall, the market is still outside and below the mid-April to late June ascending and expanding wedge pattern. This ascending wedge pattern is quite interesting as it attempted being a transition pattern for a move up and out of the bright red bearish shift pitchfork, but ended up getting sucked into the main pattern instead. Admittedly, the downside primary target for a break lower out of the wedge pattern, well, that's already been achieved, and it leaves the much harder secondary target X below down at 106 even. Personally, I have had strong doubts about achieving that level, but late last week's actions have soothed my doubts somewhat. So far today, still capped sort of by the overhead bright red lower time. Bright red upper time, and attacking the April 2020 low at 107.25 from above. I'd keep a close eye on that hidden support in the 106.66 to 106.68 zone. Cable, aka sterling against the US dollar. A bullish engulfing pattern, if only just yesterday, which wasn't that hard to achieve as the previous session was an indecisive spinning top. The base was, unsurprisingly, on the mauve highlighted medium moving average, currently at 126.40. Further down we have the short medium moving average at 126.20, which avoided being tested once again. Meanwhile, the market pushed up through the congestion at 126.72, but was fully stopped by the important combination of 50% Fibonacci line of the June 2016 to the September 22 move and the September 2020 low, both at 126.99. Overall, late 2 weeks ago, prices broke down and out from the dark blue highlighted April to early June bull channel. Now, I had thought of looking at this pattern as an ascending wedge pattern, but I will leave it as a bull channel for now. So far today, well, prices have tried once again up to the combination at 126.99, but have not really managed to penetrate it as yet. Beyond this, we have the bright red breached July 2021 to date downtrend, currently at 127.36. Euro sterling. A bullish engulfing pattern, if only just yesterday, which wasn't that hard to achieve as the previous session was an indecisive spinning top. There was also a bearish dark cloud cover pattern. The market was once again capped by the April 2021 low at 84.70, though the market did rise and breach it during the course of the day's actions, but failed to close over it. Overall, the last 2 weeks have been a reactionary move back up from the market reaching its potential down at 84.30 from a May to June based bearish halfway hesitation. Additionally, as I previously pointed out, both the primary and the secondary targets had been achieved on the downside for the break below the purple highlighted lower trend line, currently at 85.56 of the late January to late May expanding wedge pattern. So far today, we're a higher open, but the capping effect of the April 2021 lower 84.70 is still having an effect on this market. Further up, we have congestion from late May and early June that formed the recent bearish halfway hesitation, and that is in between roughly 85 even to 85.25. And right now, as we're moving down, we're looking possibly towards a bearish engulfing pattern, an immediate countering bearish engulfing pattern to the previous session's bullish engulfing pattern that was only there just. US dollar against the Japanese yen. A hanging man pattern yesterday with the highest open and the second highest close since 1990. This was after the 7 previous sessions were bullish white soldiers. Now, the hanging man pattern is a candlestick pattern that is familiar to many of you, but it does not always work as it's traditionally supposed to. You see, the hanging man pattern is traditionally seen as a bearish reversal at the top of a recent move. And it does do that, but only about 4 out of 10 times. The rest of the time, that's at 6 out of 10 times, it acts as a bullish continuation pattern. So it'll be interesting to see if the market will follow tradition or the data. Now, prices opened yesterday a little higher, over the May 1990 high at 159.61, but failed to reach the April high at 160.04 and ended up closing right on the May 1990 high. So we still have this significant congestion area between 159.61 to 160.34, starting with the May 1990 high at 159.61 and includes this year's high at 160.03 and the April 1990 high at 160.34. Looking below, we have the important bright red middle time currently at 158.56 of the July-December 2023 bullish Andrews pitchfork. So, getting caught between those two, the support and the resistance. So far today, we're a dip below the May 1990 high, and whilst prices have tried to recover back up, they have not made a great job of it until now. US dollar versus CNH, the offshore Chinese yuan. A combined key reversal down and bearish engulfing pattern yesterday, which wasn't that hard to do, as the previous session was an indecisive doji cross. It was nevertheless a new high, one not seen since November last year. Now, recently I had been wondering if the long expected rise in this market was finally happening, as the market had been remarkably slow in moving that way. Yesterday's action does not help this idea, as it pointed the way lower. Below we have the previously mentioned congestion zone between 724 to 727, within which sits the rising short medium moving average, currently 725.26, and the dark blue highlighted upper trendline extension to the January to April ascending triangle, currently 724.14. Looking topside, well, the next topside resistance of note is the mid-November 2023 high at 731.06, which ties in with some earlier congestion in the 731 even area. As a side note, I'm very tempted to look at the action since mid-March today as a possible reverse head and shoulder bottom type, but for now I'm resisting that temptation, though I may give in. So far today, well, a small attempt lower, but it has been rejected for now at least. Looking potentially like a hammer pattern right now. US dollar against the Mexican peso. A second bearish black crow yesterday and a continuation. Well, was it a third? Let's say a third bearish back clone, a continuation of the move lower from last week, when the cap on the market, however riddled with holes it might be, was the dark blue upper tine, currently 1881.75. We also had at the time the February 2020 low at 1851.71, which aided the capping action, but these two have now separated. Yesterday, prices punched down through the rapidly ascending middle time, currently at 1807.86 of the same early April, mid-May bullish Andrews pitchfork, without taking a breather, which was a bit surprising. However, the market halted its decline before testing the neckline extension below that, highlighted in bright red, of the January to May 2021 head and shoulder stop, currently at 1782.31. It's time now to consider what the next pattern will be, and for this I would like to put the following idea in front of you. We have the possibility of looking at the action from 2022 to date as a potentially a huge double bottom pattern idea. We're now after the rise during May and now into June, even after the recent falls, relatively close to the neckline area in the big scheme of things of around the February 2020 low at 1851.71. Now, as this is something I saw on my monthly charts, I would appreciate at the very least monthly closes, consecutive monthly closes over this level to confirm such a longer term potential move higher. Thus, with less than a week to go until the end of June, it's all keep an eye on where prices close on the 28th of June. Now, so far today, a dip from yesterday's close, but still well within yesterday's range, and now a seeming small reactionary move back up, looking very much like a small hammer pattern right now.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.